Hello, this is Manesh Patel with IMTF Trade. Today is January 14th. Today we're going to sit there and look at a bullish trade opportunity that exists right now. As you guys could see from my chart right here, this is PSA on the 60-minute. Okay, and the reason why I'm doing this is that yesterday, basically this weekend, I put out a video. I said the market's at a very critical position right now, major resistance and so forth. It still has a high probability to keep on going, but it's at a critical point. So what I'm looking for are 60-minute swing trades or our breakout level. And why? If it breaks out on a 60-minute, then you know the market's going to keep on continuing to go higher. So this is like a confirmation trade. Now what I did was I set up our scanner to find these shaded areas here. We're not complicating things like most technical traders do, where they're looking for this and that to cross and all that stuff. We don't do that at all. We kept it simple. Trade 1, 2, 3. So what you're doing is you're looking for this green shaded area, which basically means there's a bullish setup there. The blue dots basically tell you there's a breakout there. Okay, so this is basically where we're going to set up our trading opportunity here. I'm going to show you exactly where to enter, where your stops are, and everything else. Okay, now what I'm going to do is I'm going to put my reward risk tool up here, and I'm going to show you exactly where our entry is going to be. Okay. Now, once you sit there and decide which way you want to trade this, you could trade this with options, or you could trade this with a stock, whichever way you want to do, whatever your personal preference is and your personality. If you're trading with options, you got to make sure the volatilities are average or low in order to buy calls. If you're going to sit there and have volatility that's high, you got to do vertical spreads. Since this is a 60-minute trade, you at least want to go out 30 to about 60 days at least, unless you want to day trade this, but you really don't know when this is going to trigger. So at least go out, 30 days or so or more, 30 to about 60 days. That way, if you're buying calls, you could get out of them and not worry about the time decay. Either way, my entry is going to be there. My initial stop, yes, it looks huge, but still it's okay. It's going to be right there. Doesn't mean this is my stop at entry. These green dots will move when price gets here. So when price gets there, the green dots will be a lot higher and your risk will be lower. Okay. But what happens is you have to be able to sit there and put this on when you put the trade on. So that's your initial risk, and that's basically banking for black swan events. Now what we're going to do is we're going to sit there and see where our preserve mode is, where we're going to tighten our stops. You can see there's multiple time frame crosses right here, right there, or right there. So what we're going to do is we're going to look for probably to come to about right there. Most people sit there and look at the Fibonacci retracements. That's what that there is, and so forth. So if you look at this right now on setup, basically you have a 0.821 reward risk. This is on setup, not on entry. Okay, so when you're on entry, the stop will be a lot higher, so the reward risk will be a lot higher, and so forth. So this is a high probability trade right here. Now, here's the thing. We're not going to complicate this. How do you know this has a higher probability? Well, look here. This is a red shaded area, basically means it's bearish. Okay, it did not sit there and trigger the breakout dots at all. Then it consolidated. Then another bearish setup got triggered, and it sit there, didn't trigger at all. So this tells you it tried twice to go bearish, it could not go. And the reason why is something's going on where it does not want to go bearish at all. This is the first bullish setup that occurs after these two red shaded areas. So if this triggers here without canceling this shaded area, then you know you got a high probability, because it tried twice to go bearish, but it couldn't, and now it's got a high probability go bullish. Okay, that's the difference right there on this type of trade. Okay, this is completely different from other types of shaded areas, and let me show you that. Look here, this is shaded areas, and look at the shaded areas, how they flip. Didn't go bullish, didn't go bearish. Tried to go bearish again, couldn't do that. Couldn't go bullish, couldn't do that. Couldn't go bearish. So you could see that these shaded areas are alternating, and this is consolidating. That's not what you're looking for at all. Okay, so the one that we had was the best type of scenario to look for, okay, which is the PSA, and that's the trade we want. Now, if this bullish setup does not trigger at all, then basically we know it's going to consolidate, just like the Urban Outfitters that we just showed, where it's going to do red, green, and so forth, and those are trades you don't want to trade at all. Okay, we're going to put out a video either later today or tomorrow how to find these shaded areas for free for any instrument out there in the world, for all the time frames from 10 minute, 30 minute, 60, 120 to 40, daily, weekly, monthly. It does not matter, and so forth. So we're going to show you exactly how to find these shaded areas. Okay. Also, if you're interested in learning how to forecast these shaded areas to see if this is a high probability to sit there and trigger into go into a 3-to-1 reward risk ratio and so forth, we do have a mentoring course which is 3 months long. You could go to the imtftrade.com website and look at the foundation course, and that course is a 3-month course with me online where we actually show you how to sit there and trade and forecast breakout trades and pullback trades for a 3-to-1 reward risk ratio. Have a good day, and please watch the next video that's going to be coming to show you how to use the free scanner to find these shaded areas. Thank you.